Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong. Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Wednesday. Some interesting moves going on here. Hey, how's it going? Hey, look, I've got a bunch of people here on time, ready. Good morning, Lucas C. Keller. Well, let's go see what the markets have been doing. There's been a big move. So the big thing I was reading about this morning, where is my... Okay, Ninja Trader, like, I updated to the latest version, and they, like, changed the icon, and it's bigger. It's a bigger icon, and I can't see as much. Oh, okay, here's my chart. Okay. Like, I can't find my footprint chart. Okay. So, what we got here, well, let me come back out here for a second. Sterling had a pretty big move here. That intro had some bad echo. Really? I have to look into that. It was maybe like running twice. I don't know. I feel like something's different with my audio. Like when I'm hearing myself, it doesn't sound the same to me anymore. Anyways, Sterling, big move, right? So their inflation, their CPI was not as high as they thought. So, and that seems to be having some weird knockoff effects everywhere else. So the treasuries, they got smacked down pretty hard yesterday. And they are continuing to get smacked down here this morning. But we are back into the area, you know, anything above 3. Anything above 3. But, yeah. Anything above 3, we might get some bids come in, okay? Now, the S&P 500 pulled out a win, yesterday, but they are coming back. And, well, I think part of the bullishness is coming through that the Chinese may end their lockdowns. So I think that that's kind of going on. Oil is bid here this morning, although it took a dive yesterday. Natural gas on the up again. Gold and silver bouncing off of their lows, but still kind of in doldrums. Copper here kind of also on the move up. Then again, the dollar coming down big time from, the 104s coming back into 103, but anything over 100 is still like really high, right? Then we got Bitcoin. Bitcoin kind of flirting with disaster a few times yesterday, but able to pull things out, able to hold the range for now. And this market is kind of still looking to me like, they go sideways until options expiration. That's kind of what it's doing right now, right? Now let's see here. I'm not completely up on everything that's going on this week. We don't have. Oh, we do have building permits and housing starts here in just a few minutes. So let's go in and look at that. I think that why might I have, so let's see if I go into advanced audio properties, maybe. Well, I think that we never, it kind of depends on your technical definition of a bear market, because, for a lot of people, it has to be more than a 20% decline, and we did not get to a 20% decline. Trying to think of what could be causing the echo. So what's happening is it's coming through twice, probably. Maybe I should worry about it after stream because I don't want to don't want to have to force you to listen to it like 20 times. Okay, so here comes a number. It's not too far off from the estimate. 1.724 versus an estimated 1.756. Building permits 1.819 versus 1.814. So that's pretty in line with the estimates here today. Nope, we can't skip the political discussion. Not if it's relevant. I could go on a big long rant about how bad Joe Biden has been for the economy if you would like. I've been thinking, I was like, dude, you know what gets you really popular is when everybody hates a certain politician and you're just ragging on them like super hard, right? Like I'm betting you Fox News probably not doing too bad right now, right? Maybe I should jump on that bandwagon. Well, that's a pretty good take there at 118.17 in the 10-year Treasury, 3,000 taken. I think that the housing numbers kind of being roughly in line probably is in favor of buyers, but I'm definitely not going to jump across that spread of 7 ticks. Hey, if you get filled on limit, I don't think I want to risk that. It does sure look like they just want to sell and sell and sell today, though, don't they? Like that's pretty aggressive selling, and it's already up pretty big today. Well, you guys have chosen him. I don't know if it was so much that we chose him as much as it is that we didn't choose the other guy. You know? I take that back. How did Joe listen? That whole Democrat primary was really weird. Like I was super into it. It was like it was interesting to me, and then all of a sudden it was like it was not interesting and Joe Biden was winning. And I just couldn't ugh. But you know what it is, man. Name recognition is powerful. Name recognition is like the most powerful force in politics, seriously. Okay, so there was some good volume there, but it looks like they're going to retrace some of it. So that kind of so just based on the volume and the action that I'm seeing, I think that it's completely possible that they bounce back up and they start pushing the higher end of this range at 22. But the trend is down, so I think I would prefer to take it down a sell. I'm not seeing so when I think from an economic context, I think what we got going on here is we've had a really ugly bear market. They're likely to start turning, at least have a short-term rally of some sort in the S&P 500, and especially if Shanghai is backing off on the lockdowns. And so I think that favors short in the Treasury, long in the S&P 500. And as long as the S&P 500 is above 4050, but we're very, very close to that. So they could probably test the downside again in ES. So I'm not particularly fond of the setup that we have here today because it leaves me more dependent on market making strategies, right? Yeah, I think it leaves me more dependent on market making strategies. In a time period where the Treasury is still relatively volatile. Another thing is, I don't know if I want to get too wedded to a trade today because it's still hot in here. So apparently what happened was the compressor on my air conditioner busted. That also damaged the motor, so you're gonna have to get some new parts, and he won't be back until later in the day, and so I basically just have to bear through it for the day. But I got a lot of cold air in here to start, but I don't think that's going to last very long. I think it's going to get hot in here. We had the short rally in S&P around 60% now already since last week. I think that they will slowly push it down again. Oh, I don't think that we've really, well, and let's come back and look at the chart, right? Is that really 6% from 38.48 to 40.56? Actually, if I come back to like my daily chart, okay, yeah, it is about 5%. It is about 5%. I just for when I look at the options and some of these other models, it kind of feels to me like there is still room for like a bear market rally. I mean, like a really hard, strong rally that fizzles out quickly, right? So I saw this thing the other day. Did you see all this stuff from the 13F filings that Michael Burry has like 20% of his portfolio was short Apple? Like what? And I don't know what price he was short from. So maybe he's already made money on it from the S&P overall going down. But that just seems like such a crazy trade to me. And with a put position like that, like they're gonna squeeze that. You know what I mean? Like that's the sort of thing that I see set up here. Is you've got a bunch of hedge funds that are just like ridiculously short, and they're gonna get surprised. The camera is too low here. Even if I'm sitting up straight, it's too low. Let's fix that. That's better. All right. Well, I'm still recovering here. I don't know, 19. I mean, maybe if I got filled with a limit order here, but I don't know if it's actually going to happen. You can see that the market orders are kind of reluctant to move, right? Mm-hmm. Fine. I see it. See, nobody hit in the micros that whole way, even though I don't know. I think it's kind of starting to get to the point where you kind of have to question that it's going to be a downtrend today. Plus, there's no way I'm going to get filled at 10. Let's keep an eye on here. Let's see if anybody goes short in the micro. Could happen, but I think I'm unlikely to get filled with a limit order here. So there was somebody bought at 11. Somebody must have offered out at 11 and So do you see things kind of like close it in? Well, I can see there's another person like me with bidding at 01. You might get filled on that now that they're like a few ticks lower, right? Oh, really? Usually the robots will be like, okay, fine, they'll hit out at that one, or they'll take it rather. Like especially if they're what's gonna start off. Yeah, there you go. Okay. I guess something that I forgot about was that yesterday it was like Walmart was down 10%. That's a significant change in the market that I think we got to take note of, right? Like that's the worst day in Walmart in like so many years. That's not a good thing for the markets. Well, now somebody's willing to bid 05. How much is the volume on that? Okay, so the volume on the upside, not quite as much as it was on the downside, but it seems to be stronger in the 30 here. And so it looks like we're getting that flattening, betting on a policy mistake kind of behavior again, huh? What's Nicholas Nassim Taleb talking about this morning? Aside from narcissistic insensitivity, PRBM with Jordan Peterson is the pseudo statistical crap that produced IQ, eugenics, scientific race, blah, 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 blah. If there's a biological non-cultural preference for some shapes, it has a high variance across subjects. Where I explain how people fail to get the law of large numbers by participating in racism, by particularizing the general. Racism is one such example of assigning population traits to individuals. But Jordan Peterson has never done that. He has never said anything of that sort on IQ. In fact, the only thing I think I've ever seen Jordan Peterson, and I'm not like a dedicated follower of him, but I sure do get a lot of clips about it on TikTok, right? And the only time I've ever seen anything about that was him pointing out that the military does IQ tests, and if your IQ is too low, you can't get into the military. And that it's like a certain percentage of the population that is pretty non-trivial. Aren't we glad that we didn't take anything on that? That the market saved us from ourselves in that instance. Should I buy it? I mean, maybe you should have just gone short at 3% because that really did run the stops on the upside. In the 30-year, the volume is definitely coming through, though. I'm a little uncertain how aggressive you could be with it, and I'm also worried about like you sell the lows here and things turn around. The S&P 500 is pointed very much down at the moment, so maybe some of this that we're seeing in the treasuries is flight to safety. What about the dollar? Well, I'm seeing the dollar fall here. I'm not really seeing the 6J move too much, so this move seems to be limited to the treasuries. Home Depot was, yeah, you're right. Actually, Home Depot was like increased their dividend and all that, didn't they? But they've, lumber. They've been a good pandemic stock, haven't they? But Walmart just got crushed by the inflation. Walmart was no good. I think you're going to start to see this kind of, I mean, you were seeing it a lot at the beginning of the pandemic, right? This like dichotomy in the economy where some stocks were benefiting from the current economy a lot and others weren't. I think you're probably going to see a lot of that, but that generally overall, what I see right now is overall we are going into a slowdown that could last into next or this fall, but it's not a slowdown that necessarily has to create a recession. Okay, so something I'm noticing here is that the market makers are really being quite shy here, but I am now just seeing a bid at 24. So it looks like they're going to fill and test him, and we'll see where they go from there. Nope. Apparently not. At least not yet. See some monster sell today in the German index if we cannot hold 14,094. See, 2.986 isn't really actually the best price, right? Like I could have, that actually right there would have been an okay take. If I was going to market make, like hit that, maybe bid out at 983. That time the spread just increased. $6.47 is the time. It kind of seems to me like it could drift lower, but that leg of the meta order is probably done. Like they're probably going to back off and try and fit as much volume through in this 25 area as they can. There's a risk that they get shoved out of it though. Yeah, see, like that. They're just able to get to that top end of it very, very easily. Yeah. I wonder if I put something out there. Yeah. I thought so. Is it just me, or did I just reverse the 10-year right there? I offered out, when they did that, they all reacted and ticked down in the micros. So then I canceled it, and as soon as I canceled it, and now they're up 5 ticks. Maybe just random. But from my perspective, if they were reacting to me, how would it have been any different, right? So how can you know? It looks like maybe you might get a little bit deeper of a pullback though. Maybe to 23. So 24 was that area where there was a big bid and they couldn't get through it, right? So it's kind of looking to me now like that order that was part of the iceberg, he's probably filled. It might be interesting if they get back to 3%, right? I can't stop thinking about this tweet by Taleb here. So Peterson's been getting a lot of attention lately because he made a tweet about this Sports Illustrated swimsuit cover that I thought was a little uncharacteristic of him. Like it just seemed like such a childish thing to tweet about, you know? And so, people are catching on and are really jumping on him. But here I'm seeing Taleb jumping on him, and I think that Taleb is jumping on him for something that I don't know if Peterson does, right? I've seen Peterson talk about the statistics, and I think that he's very much aware that you can't go from the general to the particular. Okay, so they do make it back to 3%. What do you think of that? What do you think of that? I'm kind of thinking that if I'm going to take a trade here in the 10 year, I'm going to have a pretty big stop, right? Because I'm not entirely sure which direction they're headed today, and because they've just pushed both ends of this range quite aggressively on both sides. So the spread, the direction of the spread hasn't really changed too much. Because maybe it reverted a bit in the 2 and 10. Bitcoin not looking so hot right now. I guess we're in that space that I really hate. Okay, well, let's take a sim trade here. In the 10 year, or sorry, not in the 10 year, in ES. Because ES is looking a little sad. Do you have any special performance metrics that you use? For example, I'm using the Van Tharp system quality number. I think it's more. Well, so not really. Like there is definitely problems with the Sharpe ratio, right? It's just that I think that the majority of retail traders are not to the point where that sort of thing matters. You know what I mean? And I don't think that I personally am to the point where that sort of thing matters. You know, I think that what matters to me right now is more what's my trade selection. You know, man, when it's interesting to watch the E-mini as it pushes down because it's just like you can just see stops going off. Like there'll be a few orders go into the low and then somebody will sweep and take out like 4 or 5 ticks and then it comes back. there's probably some stop orders and all that. It's getting pretty trendy too. You see that? Like it's not really. Well, like as soon as I say that, it backs up. uh, well, if I wanted to bet on buying the treasury again, I could probably convince myself into both sides here at this price. Could probably go long and short at this price. But I wonder if maybe that means that we're going to be in a chop zone. Okay. ES returns back down to the low very quickly. I don't know. This is a little bit of a steady flow of buying there. Certainly doesn't wash out. There was like a huge iceberg there. Yeah. Oh, and there was at 04 half. There was 1,000, and they just sliced right through it. Now, curious, the S&P 500 is pushing down, but that's not what the treasuries are doing. The treasuries are actually moving back down to the bottom end of their range. Okay, so 040 is maybe not the best place to have a bid, is it? But, they might still fill me. Let's see. Let's see. Let's come back to Twitter here. Just scroll down a little bit further to see if there's anything else earlier overnight that I missed. No, in past days / week, the risk off in markets has actually been driven by the big tech names. This latest bounce is a relief rally of oversold conditions. Once the big tech names start to offer again, we turn bearish, is what Brandon Barrett thinks. So he's kind of with us here, right? Short covering rally. I think that there might be more to the short covering rally. Okay. But then ultimately everybody seems to think that we're going to move lower. But that's kind of what makes me think that there's going to be a stronger bear market rally here than people realize. Maybe if you open the push DS higher and reverse it. Well, don't you think it's curious how much they've been how aggressively they've been selling it here? Like, this is a really strong trend. Okay, there's the fill. This is a really strong trend down. Doesn't seem to be based on any kind of I'm sure there's reasons for it, but it's hard for me to sort out what the exact dynamic is at the moment. Well, the zero hedge story is U.S. housing starts and permits plunge in April as mortgage rates soar. So even though the numbers were in line with expectations, you could say that that it's not very good, right? Twitter board intends to close the transaction with Musk despite spam controversy. Future slide after dismal Target earnings and plunging mortgage apps. Could that be the whole thing? Is that what we're seeing in the treasuries is all just because of the housing numbers? It's possible. So we got a good sim trade going on here in ES, but I think that says that for Seth, for now, probably shouldn't be messing around too much with the micros until I have a better idea of what's going on. Morning, D. Financial Times, if you're planning to trade up to a house eventually, you might, in some circumstances, actually be better off not buying a flat at all and saving and renting instead. Here's why. Apartments have gone from the fastest growing property type to the slowest in 25. Average annual price growth by property type. This is in England, so it might not be applicable to those of us in the US. But here it was really high, and then here it was really low. Now here in the past 5 years, flats are the only property type to grow less quickly in the last 5 years than in the preceding decades. Okay, well, here's your 3% again. I have to say, though, the volume, the way that the volume played out there, because when they came back down off of those highs, there was a lot of selling in that. So I don't know if I would really want to buy the treasury anymore. That certainly puts things in favor of the sellers. I would probably rather sell it. Or sorry, sell the treasury. Buy these. A lot of mean reversion in there. But if that means that I want to buy these, then 2.995 might be the best that I'll get. If I could get filled. It's still kind of acting like you can have a hard time getting fills. If you get the fills, you might not actually want them, right? Finland and Sweden formally applied to join NATO. Oh, okay. I think that Michael Burry and his Big Short on Apple is going to be the talk of the town now, man. Well, because I said, hey, I'd rather go short treasuries here because of the volume. Of course, they're going to move up to the top of the end of the range, and who knows, maybe even bust out the top here and turn into a big bull market rally. Sorry, into a big bull. You're stocking a ZN buy? Well, we already kind of missed some of the best prices for a buy, didn't we? Right. So I was saying if I wanted to take this, if I want to go short, long rates here, 2.995. That's been cleared. Not really any volume in there. So I think that really calls into question the whole trend still. I suppose, well, it'll be interesting if this is a buy in the treasury and I'm really not sure. I really want to take a trade, but I really don't think I should. If this does move up, there was a lot of volume short. So action on the upside might be more interesting if they start breaking that new highs, right? They start breaking new highs, then maybe then I get involved. For now, it looks like the S&P 500 is kind of relaxing a little bit. That was quite a bit of sell volume on that last down move. I'm liking that sim trade though. It's starting to get hot in this room though. So that doesn't help either. It's getting hot in here. I haven't played that game in forever. Now they said the what I heard on, I think it was Zero Hedge, was that this was like the worst day in Walmart since 1987 or something. Crazy like that? Like, wow. I don't know, guys. They pushed it back down there. So somebody did come in and push the treasury down quite quickly. They recovered back to 23 very easily. Spoos. Spoos kind of look to me like they want to go lower, but they're pretty chill at the moment, actually. They're pretty chill. Well, but sometimes what you'll see happen is like it'll just all of a sudden get down to the lows and then they push it. Then they really press it. See? Could go. Could go. And I bet you that if we go, you're probably going to see more stops. Hmm. That was okay. So, do you see how it only took like 300 contracts to get through this area here? Um, this is really not good action in the treasury for market making, is it? Like this is the thing. I probably could have made some money if I had, well, I would have lost money if I had taken any of the trades I was thinking about, right? But we definitely could have made money on the range. But what I'm seeing right now is like, from my perspective, I think that I have to rely on the market making kind of side of things a little bit more in this situation because I'm not 100% sure where the volume is coming from. It does look like that the S&P 500 is just looking awfully bearish here this morning, though. In the treasury, it's all over the place, and the action that I see in the treasury is this is not very good action for market making. This is not very good action for market making. So unless I really feel strongly that it's going to go a certain way, and that's the other thing is that I'm seeing the S&P 500 just get creamed, and the treasuries aren't going just solid bid, right? People underestimate the amount of civil unrest possible that can come from escalating food and energy prices. Probably I do, because I don't see massive violence and that sort of a thing in the United States at the moment. There's gonna have to be some sort of further catalyst that allow them to blame it on something else. Okay, there's 3. If I want to go short, I could take 3. Do I want to go short? No. And it seems like, well, so let's reset right there. Okay. 21.5 has been the bottom of this range. That's interesting. Kind of watching the spread here, and it looks like that it's widened a little bit in the 10-year. So there's a little bit of a deviation outside of the range so far. Pantheon Macro says the rollover is over, quoting Ian Shepardson on U.S. housing starts in March. I am really so let's come back here because the housing starts thing is kind of weirding me out. It seems to me like I am like way out of sync here. Yeah, I don't see it. Like I keep seeing this narrative that the housing numbers was really bad, but they were you know, within the margin of error for those numbers and really quite in line with past months as well. I mean, that for housing starts, that is a decline, but it's not like the biggest decline in this data series or anything like that. So I don't understand why the media seems to be latching onto that thing. Maybe it's just because the S&P 500 is selling really hard and they don't have any better reason for it. Okay. Treasury Secretary Yellen, tighter U.S. monetary policy, risk aversion are factors favoring dollar strength. So as I'm watching this, I'm just kind of like, okay, so if I offer it out here, does it change? No, it does. Well, actually, they picked up. Hmm. Well, I think I need to just kind of try and relax in this area. You can tell like I really want to get involved, don't I? Whoa. What the what? Did you see that one? Somebody just got slammed there. Like the ton of sell volume came through there in the 5-year. Okay, they recovered that price where all that volume came out at. I don't know about that one. There maybe somebody on one side of that is really aggressive and is going to eventually push it out of the range. But that kind of action is often a don't touch it sort of a thing, right? Like 21.5 probably, and it's already point of control. there you probably could see a lot more volume trade there now. So now the buyers t- trying their take on it. Should have done it. Oh well. So we gotta be careful. We could get sucked back down into that thing, right? And I should note that the buying again appears to be much more aggressive in the 30-year. So a risk off flight to safety move with a bet on a Federal Reserve policy mistake trade coming through here, I think. And let's just center it there. Booze pushing down again. That's an awfully speculative claim that you make in there, Andre. Pros running campaign front running housing student loan forgiveness and lower rates and prices 12 to 18 months out. I have not noticed a tendency for the treasuries to move in a certain direction based off of whether they think that student loan forgiveness will happen. Yeah, that's what I was afraid of. See, the 2.995 would have been so much better. Well, but what I'm looking for is specific reasons to believe that that's what's causing these orders, right? Referring to the housing starts focus? Maybe. I do find the housing starts focus really bizarre because it I don't see anything unusual in the number. Yeah, maybe news is kind of pushing a certain way. I haven't really seen any of the traders say anything about it. It's just I think that what's going on there on that is that the the business news don't really have anything else to talk about. Like we're getting into the slower time of the month for news. You know, we're not getting as many economic numbers. They're not as significant. So what else do you got to talk about? Well, at least in terms of why is the S&P 500 tanking, right? Because you can't go and spend all your time talking about Elon Musk and Michael Burry, and then not have an explanation for why the S&P 500 is tanking. Okay, so I'm not really seeing it in the volume in the 10-year yet, But we are seeing it kind of in the Bryce movement that there does appear to be more uptrend in this than downtrend. They come back up to the higher end of that range quite easily in the 10-year, and the market makers are not really stopping them at all. I guess the reason that your comment kind of throws me off a little bit, Andre, is that I really don't think that student loan forgiveness is a serious thing. Like they'll talk about it. They kind of want it to have, make it an issue for the midterms, but I think it's extremely unlikely that they actually pull the trigger on that. And they certainly wouldn't do it through executive fiat. Like if they tried that, I think that they'd get sued and lose. It seems I think that if they really did that, it would be a very short-sighted political mistake. And I'm not sure if that really moves the needle for Democrats. Like they can push the abortion thing. That's probably a better narrative for them than student loan forgiveness. you know. Oh man. I got to tell you, I'm a little concerned about the direction our society starts to go if they do student loan forgiveness. That would be a very socially toxic policy. Okay. Well, they're kind of trying to get it to go bid at 25, but it keeps reloading. So for now, the trend in the treasuries have subsided a little bit. Well, what do you think the S&P 500 is going to do on the open? I think when you were saying earlier that they could that maybe they'll buy on the open. No, this is some trend. That's some real trend going into the open. So probably the first move is a continuation of the trend. Yeah, I think that the first move is a continuation of the trend, but you would have to be cautious on it because it probably, like I'll take contracts off after the first leg. The first leg down. If they really open up down first leg, then I'll take some off. I think the Treasury might still have some more upside left in them, but for now, they kind of had to back off because that price wasn't really working out for them. Let's kind of clear our DOM here a little bit. One of the interesting things about this move in the Treasury is that it's not really correlated with the move in the 6J or the dollar at the moment. Well, I take that back. We are seeing a little bit of movement into the dollar, but Stuxenhammer666 says people are reporting that Truth Social is now accessible via a normal web browser, but I am seeing no such option anywhere. Forbes, recession risks are contagious as Japan's GDP stumbles again. So what happens if let's say that things kind of play out the way that we think they will in the S&P 500. We have a short-term slowdown, but it does not result in a recession. But Japan does go into recession. Then what happens? Because then you really got like a big dichotomy in central bank policy. Wow, they slammed that one. Do you see that? They were starting to hit into 23 half. They were starting to sell into 23 half, and then the market makers like just completely flipped and orders started slamming into 24 half and 25 very quickly. They're still not taking and holding 25, but that was a significant flip there. It's some traders getting some whiplash in there. It comes back down the other way. That one was a little bit more gentle, but look, there's some orders. There are 2 orders at 23 half. And they take it offer with only 129 contracts. Yeah, about 3 minutes here till the S&P 500 opens. So I'm still not seeing like a significant change in the volume in the 10-year, but they are still buying pretty aggressively in the 30. So I'm still kind of looking at this like if they bust out the top here, that could get interesting. But I'm just not quite seeing the interest in it yet. I guess Yellen is still talking. Don't think that she's saying anything too significant or that it's that instrumental in the move that we're seeing, but it is happening. Okay, 24 half bid. That's a little bit better of a bid than we've seen. Concur the CVD has been on a sell for the past 2 hours. Well, yeah, like they sold it, but like that's the whole thing is that through all of that selling, the 10-year is higher, right? Throughout that selling, the treasury is higher. I'm not seeing a correlation that would have pushed it up. The only thing that I am seeing where there's buying that would push the treasuries up is in the 30-year. So perhaps the reason that the volume looks the way that it does in the 10-year at the moment is because of spreading action, right? Emerging market countries are on the verge of bankruptcy because of the dollar. It will not be long before there is noise in Turkey and the Balkans. Really? I mean, I haven't really seen any media to that end. I mean, isn't a stronger dollar kind of good for those currencies, for those countries? Oh, actually, maybe not. Kind of depends on which side of that equation you're on. But if you're a producer in those countries, the stronger dollar is good. So it means that Americans will have more money to be able to buy your products, and you'll be able to offer your products cheaper. Okay, so just there on that last move, just note that the 5 year is kind of leading them now. Alligator says yes, messy, limited volatility and volume today, more signs of economic weakness. Maybe. Oh, is this the open? Did I miss the open? It was not a super strong. Well, the volume on the open was a sell. The volume on the open was a sell, but it was not super strong, was it? Let's see. Okay, so as the S&P 500 started to tick down there towards the lows, the treasuries had another aggressive uptick, and then the S&P 500 kind of backed off. But I'm thinking that they may yet succumb, and we could see more flight to safety volume come into the treasury here, perhaps. And what that just suggested to me. Oh, come on, you can do it. Live a little. Guess not. The problem is the commodity and dollar debt. Okay, sure. Yeah, that's what I was saying. It kind of depends on, because if you have the debt, then the dollar being stronger and your currency being weaker means that you owe more. Right? I'm gonna go out and do some searching to see if I can find any additional evidence and support that that's a significant thing going. Okay, so wow. They when they hit there was some real stops in the micros, wasn't there? And they did, I think, finally have a more solid bid at 25 in the 10 year. They're not hitting into 25 half yet, so it's not a break at the top of the range yet, but that's the best I've seen the liquidity there yet. Okay, so there they eat away that pretty easily. Oh wow, 1146. Okay, so now you're getting a reload at the top. That puts us in a good position. Yes, sir. No, if they actually go, that is. I gotta be patient. It's falling back there very quickly. Hmm. I think that somebody just panicked there and bailed. Maybe why we broke the top. It wasn't a new high of the session though yet. They didn't do it. Oh man, are they gonna come do that, like a false breakout and touch the bottom end of this now? Maybe I got too excited there. Well, the S&P 500 like pushed the lows. Part of that was the S&P 500 had like a stop run of the lows and then reversed back up into the opening price again. So that might have been part of that. Whoa. Okay, so now it kind of seems like that when we are getting some selling in the S&P 500, that I'm seeing a lot of volatility come into it now too. Like my DOM is having a hard time keeping up with the amount of volume that's dumping into ES right here. Oh, they're holding for now. Okay, so Feds Evans is going to be on the TV, is going to be on Bloomberg TV in the next 30 minutes or so. I don't know if I like that. Back to 24 again. Okay, so we did see a test on the downside in the S&P 500. It was a little short-lived. They are bouncing at the moment. They kind of got right to the point where I started to get excited about seeing some stop runs and stuff, and they backed off, basically. Also, on that move, saw the 5-year come back quite aggressively as well. Spreads consolidating a little bit here as well. Probably a lot of retail traders not happy about that. Not happy about them pushing the top side there and then not continuing. Like there was a really solid level break set up there and they didn't take it. There you go. There's the break of the other side of the range. Hmm. I'm still kind of seeing like maybe 10-year is kind of starting to turn to the sell side. The 30 is still a very gradual uptrend. Hmm. I don't know what I want to do here. I'm not particularly happy about the action, but it kind of still looks like they want to just get stuck in this range here, right? Oh, look at that. Two ticks up at a time in the 10-year. Are they gonna slam it right back up to the high again? Oh well, that's because the S&P 500 turned south really quickly. Wow. They turned down so quickly. What was that? Man, that was really surprising. Still not a break of the high in the 10-year, but that's got to be coming. Come on. Come on. Really? Really down to okay. Okay. Whatever. Whatever. Okay. Okay. There we go. There's a new high on. They take that one bid very quickly. Okay, so we'll take the third contract off there at the 40.25. Now, as for this 10-year trade, the highs of the overnight session are all the way up at 31. So 119 even is kind of the larger target above us. That seems awfully far away, though, doesn't it? It is crazy, Octavius. It is, right? For the treasuries? Well, I think that the treasuries are mostly reacting to the S&P 500 is what I think's going on here, which is not my favorite trade. I have to say, like I hate it when we're forced to become e-mini traders, right? Because the e-mini can do all sorts of random crap. But that just man, it was just like the ES turned on a dime. Like it seemed like okay, actually maybe it's not going to be an ugly down day in the S&P 500, you know. And then all of a sudden, within like 10 seconds, they were at the low and just crashed right through it. That really was. I wouldn't say it was like a clear news move, but you know, it was is kind of getting into that kind of territory, right? And man, well, you did see some significant buy volume come into the 10-year now at this point, but they're still like fairly significantly down. I think that we could still see uh, um, some more cumulative delta long come into this. You know, if they're really, you know, so a lot of that selling in the 10-year probably was just from spreads, but you know, let's just keep an eye out. There might have to be some short covering that will push the 10-year up more. Man, and when they broke those highs at 26 and a half, they really whoosh, didn't they? Well, that'll be a little disappointing if they don't if they sputter out before they get the 119, but for the moment that just kind of looks like that move up was so quick that they got sucked back into the hole a little bit. No, I can hear the puppy. He's sad. Even though I don't think anybody is down here. No? Well, Interestingly enough, the spread here in the micros is still pretty tight. What's with that? That's like the opposite of what it should be. We just had like a big move. They should be increasing their spreads. Eh. Hmm. Like I can see some more buy volume coming in, but they're kind of having a hard time holding it. They keep getting sucked back down. You mean over here? You see the down at the very bottom left, those two yellow lines? Yeah, they're both kind of heading on the downside. Here. It's kind of shifting now that they've made that big move, but see the downside there? And then when you look at what's happening here, they're buying the 30, they're selling the 10, they're selling the 5, right? But then here when this broke out, like it came really strongly into the 5. So I think that was the shorter term rates kind of reacting to doesn't the economy all of a sudden doesn't look so good, right? Okay, so it looks like the treasuries will come back and revisit the scene of the crime. Still not seeing too much movement in the 6J, by the way. We are going to get Feds Evans here, too. That might be why we're seeing some profit taking on that. Man, 1 minute bars on the S&P are getting a little hairy. uh, shoot. I don't know what I think about that. So the question in my mind now is, do I hold out and hope for another leg? And I think kind of the problem with that trade, although it could happen, is that the push to the upside seemed to be very much driven by the S&P 500, right? So we might not have like some really consistent block order buying here to rely upon. Well, that was a relatively significant uptick there at 26.5 though, right? So if I really thought that we had like a really well, okay, now we did have like the initial move 630, 715. It didn't really do anything. 745, it broke out. You know, they've got time. They probably will, you know, settle and kind of chop around in this zone a bit. Unfortunately, I'm not so sure that we come back up to 30 anytime soon. Might be like 45 minutes from now, and then maybe they'll do it. And then, do I want to wait around that long? Kind of questioning it, right? Some good upticks though. S&P 500 looks pointed down again. I can definitely see where the market maker is kind of forcing those risk off traders to pay up. Okay. Only 151 to take that one, huh? That was curious. Is just so very unlike the treasury to go like 2 ticks at a time like we've been seeing. It's really kind of catching me off guard every time it happens. Hmm. Kind of a little bit of wrangling around 29 there. There's the S&P 500 hitting new lows. Hmm. Hmm. Well, if the 10-year breaks a new high again, that could get real messy because I don't think that these guys rebalanced, right? Okay. Yeah, see, he's gonna smack it down. This is difficult action, huh? Even though we got like a really strong trend, like getting a good exit here has been like really hard. Like look at how quickly it comes back. Indeed, yep. No, I don't like that. No, but don't like that either. Okay. Okay, so it looks like maybe they're gonna try and dig it out here. Well, you kind of get this thing where, like, yeah, the market makers keep jumping out of the way. It's just really slippery out there, right? I'd say those last few ticks there start to make the chart look really nice, but remains to be seen if we actually. So when you get like a consolidating range to the upside in the treasury, that tends to be a good sign. I wouldn't trade just on the pattern alone, but given that so far the trend has turned out to be very clearly in the regular session to be to the upside, right? Get a consolidating range, they get back up there to the top. That could be really good because again, if they bust this top, there's it kind of it looks to me that in the 10-year there could be some fuel. There could be some fuel for them to move. But we got Feds Evans speaking here, right? So that's like a big risk, and that might be why they moved the way they did. Okay, so I'm seeing there in the micros that these guys don't want to bid. Or rather, the bids down here want fills. So did you see that? There's no spread and it's not filling me. So if I want it, if I really still want it, I'm gonna have to be a little tricky here. S&P 500 pushing down again. Another new low. Nope. Yeah, I'll take 15. Well, no, I think that the market makers are just. Oh, there you go. Now it does it. Now it does it. Now that I get out. Fuck. Oh, it's gonna go, isn't it? No, I should. So don't. I'm not gonna get all emotional about it. Okay. I think that I did what I had to do. I didn't want to lose more than 5 off of there. I could have gotten the exit that I wanted. I don't know if I had waited if it actually would have done that. I don't know. Like there was definitely a thing that because I had a bid there and it wasn't moving that they backed away from it. So I didn't want to hit into it. It's just that now I'm missing out. No, I think I made a mistake there. I think I made a mistake. I think I let my emotions get the best of me. But what you got to be careful about is like not coming in and making another mistake off of that. So it's probably best for me to not take a trade, even though all of a sudden I feel like, oh, it is going to go and I need to get short right now. It's probably doing some of this because of Feds Evans, right? So that was kind of why I was getting nervous. Like I didn't want him to come in and say something really hawkish and see the treasuries just all of a sudden collapse down, right, on me. So that I was like, I want to get out with what I can. I wanted 20 on the trade. I got 15. That's okay. I don't necessarily want to be in a trade at the moment until he's done talking. Overall, I think I played that trade pretty well, even though it was a really difficult and emotional trade for me. At least I think that I played the entry of it and holding it through all that garbage. I think I did good. What was my trade in ES? Basically, as soon as I saw them pressing 40-50, I decided to go short on that one, just off of knowing that that was a key level for the options. I'm gonna, you know what? I'm going to walk away from it because this, I know it's gonna go higher, and I'm not in the state to do this. Like, sit and watch it. I need to walk away from it. Otherwise, I'm just gonna get mad at myself. I didn't lose or anything. I missed out on like what, $15. I got like half of what I could have gotten because I got it at 975, so that's 510. We're still at 25, but maybe I would get the 30 right. 2.96 would have been 30 for me. And look, it's gonna come back. So like if I was still in the trade, I would probably still be like a little scared and maybe bidding at 965, right? You think they'll go under 4,000? Well, I am going to, let's see here. 4,000 is still a ways away. No, you know what? If I get it, I'm going to exit there. Because I agree with you. I think that they will go under 4,000, but I don't know if they'll stay under 4,000. Do you know what I mean? Yeah, you smell what I'm stepping in? Got it. Like, I think they go to 4,000 and then they start playing all the games that they do of those key levels. I should point out again that all of my trades in ES are just sim. It sure looks nice though to see 1,500 profit listed on the DOM there, ain't it? Ain't it? I guess we have to find an entry well with this direction. Yeah, like one of the problems was that I did not get the best price, right? I got like 2.985 and I was trying to get 2.9 or maybe 3. So that really could have been more like a $40 winner for me if I had really, but you know what? Like, I'm trying to be so optimal, like it's not really possible to be that optimal, right? I guess I demand a lot of myself. I have to say something that I found, especially in the treasuries, is that fighting over ticks does matter. Okay. If you can, if you really think you're gonna get long, right? And you get a move where they aggressively push against you and you go, oh no, that's fake breakout. I want to buy that, right? Makes and you win on that one. It makes such a difference. It makes such a difference when you just get in like even those like extra 2 ticks on the sides, but that's like 4 ticks overall, and that's like equal to like what your average rotation is going to be. So it makes a big difference. It makes it a lot easier to hold trades. It makes it a lot easier to bail when things go wrong, you know? Well, there appears to be a little bit of support at 30. Although I'm kind of wondering if they don't bust through it and kind of come back again like they've been doing. Fed's Evans, I'm extremely confident that the Fed can bring inflation down. That's not too inspiring for those of us concerned about Federal Reserve going too aggressively and crashing the economy. Well, 1554 traded on the bid at 30. Oh, pulled and went. Okay. The bid pulled and then they took it. Okay. Well, look, the offer wasn't very strong. That might have been a lure. And now it's bid and you got a fairly strong bid. Like that, if you sold into that, you're not happy. Okay, so Feds Evans is done talking now. I am still leaning on the buy. I just don't like that price. Maybe if they came back to where I got out, maybe I might try and wrangle something out of it again. S&B Chair Go Jordan, CHF is a safe haven. NIRP and FX interventions remain necessary to meet mandate. UK inflation hits 9%. Do you think a European oil embargo will affect U.S. markets? Because I think this will be one of the next geopolitical events. Well, it definitely affected markets when the headline was basically it's going to happen. I would hope that by the time it does happen, that the market is very well prepared for it. It shouldn't come as a shock to anybody, right? It shouldn't come as a shock to anybody. Now, it kind of makes you wonder if there's going to be an oil embargo. Couldn't oil prices be a lot higher than they are? I don't know, because that trade is kind of caught between geopolitical uncertainty continues and oh no, we're going into another recession, right? So it kind of makes it a tough trade to try and play that one. Which may be why it's not being which is to mean that the key deciding factor, I think, at the moment in where almost every asset right now ends up going is really dependent on whether we go into a recession or not. And I don't think that the oil embargo is going to really impact that. So it may be worth taking a risk in oil, but I don't know if the risk reward on that one is actually that great. Okay, well, they're not giving me my opportunity. Coming back up there to that. No, maybe not. Backing off. They don't allow micro rates? What do you mean by that? Oh, they don't allow it at all? Wait, who's your broker? Are you not on NinjaTrader? You may just have to ask them to enable them. Oh, are you in Canada? GFF, yep, you were in Canada. There's 119 even. That's what we wanted. If China opens up again and they put this embargo in, then higher prices are logical, but in markets, logical thinking sometimes doesn't play out. Well, yeah, but again, Well, it's not just that China opens up again. It's like the risks that like the COVID thing continues to be a problem in China is quite high, right? But I think that a lot of it is just the price that they're already at, right? Like we can definitely say an oil embargo is a will push oil prices higher, generally speaking. But how much of that is already priced in to the current price, right? So to make a call like that, I would have to be, reading on a report by like, Goldman or JP Morgan or whatever, and them saying, okay, well, when the oil embargo takes place, that's going to take this much oil off the market and yada, yada, yada. But I think that the other thing that's been happening is that we have kind of like not been buying Russian oil, but like the world has found ways around it, right? Like that just means that the Russians sell their oil to China, for instance. So it might the way the market is acting suggests that it's not that impactful. But let's just remember that the market's not informationally efficient, so maybe it doesn't matter. Jeez. I feel like I really bungled that trade and that it was all it down to my emotions. I don't think that it was bad for me to take a profit where I was, but if I had just been really stuck to my guns, there was a lot more in that, right? And I'm kind of been stocking going going in again, but I haven't been too happy with the prices, but that's kind of what's kept me out of some of those moves before. So I'm probably asking for too much. On a day where kind of coming into it, I was a little bit uncertain that I would be able to pull anything out. This has been pretty good action, but okay. See the way this has been moving in the treasury, like if you bought 119 there, right? You're down 2 ticks. And it's likely to come back down to maybe this 30 area again, right? Then maybe you can get a fill. It might be a tough fill, right? But you don't want to have to sit through that whole pullback and then wait for it to come back up and maybe another leg happens, right? That can like really screw you over. So as tough as it is, I do kind of have to catch the right price if I'm going to get in this again. I'm kind of thinking that I may just be done for the day. Like I am a little frustrated by that. So I think that I might be in a position to make a bad mistake. The corn is getting hammered here. How long has that been going on for? That's been going on for a while. Kappa not moving. Natural gas, it's had moves both ways. But corn, just getting hammered. Corn and soybeans. What do you think about that? Oh, look, there's a big offer there at 30.5. And they took him. Well, all bets are off now. I don't think I want to touch that now. I think that trade might make them get stuck at 30.5 again. It kind of looks like that there could be further legs on here, but they're starting to play games with each other. So that's a situation where it makes us really hard for us to catch a spot where we're not going to get some really nasty adverse excursion, I think. Right? There you go. He took it. They push it down 2 ticks. Strong bid at 30. No, like I want to wait. Want to like maybe if I want to take another trade and I really think that this is going to push higher, like maybe at 11 o'clock Eastern time when we close. Maybe it'll look better. But that right there kind of makes me not want to trade. When I started seeing the big players play games like that is a signal to me to not play. So I'm not going to reward that kind of nonsense. Micros are still given a pretty tight range there, which is interesting. Alligator says, not a place to buy. Resistance everywhere. Good chance for a deeper pullback, in my opinion. Yeah. Yeah, it was a really messy uptrend in the treasury. But you know what? This reminds me a lot. This reminds me a lot of action that I remember seeing in like 2017. Of course, there was a lot more liquidity back then. So you see that like with them coming back up to the high, like what we just saw there suggests so far is that somebody was placing big offers out to try and push them lower so that they could maybe get better prices. That's kind of what it suggests to me. But he took the orders. He took the orders and then they pushed through them. Oh boy. Okay, peak. Tweeting China adds lockdown zone in Tianjin's Binhai, a new area. So while markets were rallying in recent days off of rumors that China would ease lockdown restrictions, I am now getting signs on Twitter that the lockdowns are only expanding. I don't think that this piece of news has hit the whole market yet. Because I'm not seeing it from any of the news squawks. I'm seeing this from Papyrus IQ. This is CCTV is reporting that. I don't know who that is. Oh, okay. Bloomberg is reporting it. But my main news squawks have not reported it yet. Maybe that 30 is all you're gonna get. Oh man, Marco Rubio has been coming out with the stingers lately. He's tweeting a video on Fox News that says Biden favors Venezuelan oil over drilling in the U.S. And Marco Rubio's comment is there are people on the left who will, of course, never openly admit it, but they are happy about inflation. Marco Rubio has tended to be kind of relatively soft, but he's been starting to become more vocal in the last week. I'm like, just as I'm thinking, okay, yeah, maybe they're going to come all the way back down now, 2 ticks up again. I'm not sure I like my positioning here if I were to get long, but I do kind of see this pressure continuing through, although there has been a change in the volume. There's definitely been a change in the volume. Like the market volume is basically a contrarian indicator here on this move up, because this last pullback you saw a lot more selling in it. Oh yep, crude oil inventories in 8 minutes. You're right. CIBC says CPI data virtually guarantees a 50 basis point Bank of Canada hike. That's BOC, right? I think so. No, that's not what they call the Bank of Canada. I don't think that's what they call Canada's. Isn't that China's? Oh, no, it is Canada. It is Canada. Okay, go. It's all good. Go. Okay. So the 10-year is showing a little bit stronger of a bit than the other two there. And it seems like they're trying to squeeze in there. That 5-year ticks up. Maybe they'll attack the highs. No, down tick again. Down tick. Yes. There was a strike at the lows, but they didn't go. What's the best way for me to say that? They went for it in ES, but they didn't break 4012 yet. I do have to wonder though. It just seems like they're so close to 4,000. Why wouldn't they go down and tag it? Yeah. But maybe that's exactly why they won't. I'm gonna reset here. I would place a bet that they will. Well, I've got a sim trade on that says that they will. Mohammed El Rain, if I may, a comment directed at those still questioning the wisdom of windfall taxation on energy companies enjoying what economists call supernormal profits. This in order to help protect the most vulnerable segments of our society from the ravages. Is Mohammed El Aran in favor of a windfall tax? Yes, it may not be a first best measure, but it dominates all other feasible policy actions at this stage, and it's much better than doing nothing. Whoa, how does you taxing oil help me? Doesn't. I'm really tired of people trying to convince me that the government taking money from other people will somehow eventually be to my benefit, because it never ends up being that way, right? They just turn around and they go and they spend it on defense stuff or it. I don't ever see that money. Why should I care if you tax them more or not? I only care if you tax them more or not in as much as it hurts the business and, has negative economic impacts for me. Hey guys, you know what? There's not enough oil out there. Well, you know what? Maybe we should drill for more oil. No. We can't do that because the government hates us, and eventually they're going to come in and take all our money. So we're going to have to save the money up. See what this does? See what this does? Stop punishing people for being successful. Okay, you're an oil company. You made money because you're in oil because oil prices are high. That's just what happens. You don't come in and, oh, that's not fair. You made money. We can take it away. Come on. Stop. I'm surprised that is not the sort of policy that I would expect Mohammed El Ran to support. It's kind of weird. Well, as I'm saying that, the treasuries tick back up here again, and it looks like maybe now they're going to push. Nope. The micro 10 is looks like it's going to push a new low, but the 10 year's not quite doing it yet. It's close. Could pop. Let's line them up. They're not quite lined up to all run, but like we could do it here. I don't know if that means like sell 29 and 22.995. Okay, there's a new high, but it was only they only touched it briefly and then they ticked back down. And that would have been 40, man. Normally, I would have been more stubborn. I would have stayed in that trade. I don't know why I was so flaky this time. I guess part of it was because I don't necessarily come into the day thinking that I had a really strong edge. So I kind of said, well, let's not expect too strong of a trend, but like it's continuing through. So here's the oil inventory. So it's a draw. Why don't you use a higher value for the depth? Do you mean why am I not showing more depth of market levels? I'm showing as many levels as CQG gives me. Yeah, you have rhythmic and you'll have all of the depth levels. Yep. I'm kind of leaning towards getting off of Ninja Trader and going over to like Edge Clear or somewhere where I can get rhythmic data. But how much longer can these bids hold this thing? Well, as long as the S&P 500 is kind of on the downtrend, I think that the treasuries could probably continue to push up. But it's just kind of a question of what's a good price? Because what happens if the S&P 500 hits 4,000 and then bounces off of it hard, right? Like these treasuries could collapse back really quickly. It's just like hitting into the high. So when we were looking at it and we're saying, okay, are they going to break a new high? That one, maybe you can justify that one, right? If you can catch it as she goes, that might be a good spot to try and get it. But then, like as soon as you see a little bit of how do we say, slowdown, you get out. It's probably not there. So if we had taken 2.9955, for instance, I'd probably have my mouse cursor at 2.945. Okay, that would probably be enough to get me out on that because there's too much volume trading it. The user interface. Well, you don't actually use Rhythmic. You just use their data, and you still use Jigsaw, right? And you can pipe the data into NinjaTrader. Like you can use the free version of NinjaTrader with Rhythmic data actually. Okay, so do you see what happened there? So I wouldn't have gotten 2.945. I would have hit out at 2.948. It came back. How did I know that? Because I could see all of the volume coming in through here. Kind of says, okay, the book is weak. They're going to fall back into the hole. So now we get to play this game again of, okay, is it actually going to go higher today? I don't know, but let's just assume that we think it will. We could have, if we had gotten the short at 3% or where we wanted, that would have been a $50 trade. I would have been super happy, but that's okay. How far back is it going to go higher? If so, how far back is it going to go? Well, this isn't terrible. You got a few ticks back, but maybe they come back to here. Maybe they come back to the break. Maybe they're done. Maybe that's too far for them. I don't know. Big money as risk off bond. Yeah, I don't know. It's definitely in the 30-year. I have to say that if you're watching the volume in the 10-year, it's not really giving you very good signals, because the market orders in the 10-year there's still a lot of selling through that. But okay, so there's a big iceberg there at 02. When exporting rhythmic to jigsaw, do you notice a slight lag? No. So the way that that works is because they're both on C#, they are actually sticking the objects in memory and passing them through memory. So the most you're going to get is like a millisecond of lag. And we have actually tested this where we were using CQG data on one side and rhythmic coming through. Actually, how did we do it? I know I show it in one of those videos, right? Basically, when you're using the bridge maybe adds a millisecond. But I think there's something else that goes on here. It seems to me that when the market starts to get really testy, that my machine has a hard time handling it. And I think that that might be because of all of the indicators I have on NinjaTrader. I've kind of been leaning towards simplifying that. I took off some, so I used to have all of the inventory cost basis data series on a lower, basically you add the indicator twice, and the second one you add it so that it adds the data series. And that, I think, was probably adding a lot. So I took all of those ones off because I don't really look at that too much. I'm considering Edge Clear 2 NT isn't great anymore. Well, it's just the rhythmic. It's like I still love the NinjaTrader platform. It's just, how do I put this? I feel like that there are certain limitations within any retail platform. And I really want to get like directly connected to rhythmic data and piping it into Python, is what I would really should be doing. Oh, well, looks like you would have gotten filled at 9.4 if you had waited. It did come back up there really quickly. Whoa, here comes ES. Okay, so after that draw in oil, there was a little bit of a rise, but now oil is just crashing. Is just crashing, and the S&P 500 is pushing lower again. So it still appears to me that this movement that we're getting in the bonds is not a large meta order it's not a block trade. Let me put it that way. We could still consider it a meta order, but the meta order is correlation with the S&P 500. Risk off, flight to safety from the S&P 500. That's why they're coming off. Well, it sucks when it comes to the DOM and the heat map. The ones that they have aren't very good. The ones that they have aren't very good compared to what you've got in Jigsaw. That's for sure. In terms of like the platform that they have for building indicators, though, nothing comes even close. Nothing comes even close to NinjaTrader as for a platform for developing indicators, especially order flow indicators. The stuff that they've got in there, the way that it works with you being able to just run the on market data or on market depth methods to process all of those, there's just nothing better. And then the tick replay is really useful too. Even though I think there's some real inaccuracies with the tick replay data. I thought that it was like trivial differences, but because when you're looking at like a cumulative delta between the two of them, it is trivial, but it does seem to change your algos if you have algos doing stuff with it. Notice though, I don't know who you're talking about, but Why would you remove volume? Listen, so if you're just showing volume, it's not really very useful, is it? But volume by price is super useful. Volume by price is super useful. Oh, he's from Axia. Gotcha. You got busy and missed the ZN buy? Yeah, well, I caught some of it, but this could have been a $50 plus trade for me, and I only took $15 out of it. I got scared out of it at one point, and I've just kind of sat here and sulked over the rest of the move. I think that my emotions got the best of me today, guys. I was super nervous for some reason on that thing. I was really worried that all of my profits were going to get wiped out and I was going to have to scratch the trade, and I didn't want that. I didn't want to lose the 15. So I got out when it was coming back, and like as soon as I got out, it started pushing again. Super annoying. I don't know if the higher depth actually makes a big difference, to be honest with you. Um, it's nice to see there's a price with a lot of volume at it that's way up there, but it's very rare that I find that being like a big deal, right? I think that the advantage of Rhythmic is your ability to use the Rhythmic Trader Pro plugin mode and not have to use the bridge. Because if Ninja Trader crashes or it's chugging on the data, that shouldn't affect Jigsaw, right? And that's the advantage. And I think that is more significant advantage than seeing the multiple levels of depth. But I do prefer the multiple levels of depth. But that's just, I think that's just a preference. I don't think that I end up making more money because of that. But I could end up making more money if my DOM is more responsive and fast action, because it really does get into these points where it kind of gets chunky. I have to say, when I'm watching this, like every time it comes back, I'm like, okay, like maybe they're gonna push a little bit further and I can get enough of a move that I think I want to buy, and then it goes higher. I if they move higher again here, like if they push through 050 and like come through and just immediately start pushing into 08, that would be like crazy surprising, right? That would be great. I mean, the 5-year just like busted out there, so it may happen. That would, if that's what happens, then that would have to mean that I think that would be saying to me that the market is really scared right now. Like there is some real risk off volume coming into the market this time in the treasury, and in a way that it didn't when the S&P 500 was cratering before. I do have the RAM. I notice that I will run out of CPU usage. Oh, here, I'll just show you. Performance. So memory, I usually sit there at 45%, right? But if my CPU is hitting 31% right now in like relatively mild action, what do you think it's going to do when things are crazy, right? It gets pegged. And I am using the I'm using the NVIDIA codec, so the stream is not really using any CPU. So what's using it all? Yeah, let's go and look. What's using 32% of the CPU? And Ninja Trader is 7%, and Jigsaw at 4%. And Brave using some too because of Twitter, probably, right? So yeah, when things get hairy, can check a little bit. Probably I need a new machine. It's probably time for a new machine. Yeah, now they're pushing 06. Look, where I was saying 955, that would have been a good trade. I should have taken it, shouldn't have been afraid. Is that map publicly available? What are you talking about? You talking about the performance thing that I have, that I had up? Just press Control Shift Escape. Okay, maybe they will back off. So ES hasn't touched 4,000 yet. They're kind of toying around with me, being like, no, we're not going to do it. Yeah, well, why do not many retail traders like bonds? I don't know, FTH. I think a lot of it is just that the S&P 500. Well, okay, so there's two things really. The first thing is that everybody talks about stocks, so you're almost always going to get introduced to index trading first, right? But another thing that I think goes on is that retail traders come in and they say, okay, what's going to make me the most money? Like, I can afford to put $50 of risk on at a time, like for margin or whatever. How much money can I make off of that? Oh, well, it looks like that the thing that is the most volatile and that would make me the most money in this situation is NASDAQ. And so you get all of these people trading NQ futures and blowing their accounts all the time, right? What if you took a step back and you said, well, large traders that are really, really good have a 20% annual return rate. Like Renaissance Technologies has just an insane legendary return rate of 20% per year. So maybe if I'm here in the futures and my account starts with $1,000 in it and I end up making $200 in the year, that's pretty darn good. But if that's really what you're looking for, then the amount that you're looking for in a move is a lot less, isn't it? Isn't it? So we're all over leveraged, basically. So what if you take this different approach, which is I just want to trade and I want to learn as much as possible. And I have a limited amount of capital and I know that I'm likely to lose that capital when I'm starting out trading. So I'm going to take on as little risk as possible. And where is that? Micro tenure. So I think that we have a really good case to make, right, to the trading world that micro 10-year futures is the place to start. I mean, treasuries was always kind of the place to start if you really wanted to learn. There is a big iceberg there at 10, or sorry, at 02. 02. We'll see if it backs up there, but it was kind of the thing that I was kind of worried about, where it was like that could be a reversal. Here's your hero trade. How much do you take off of it? Maybe back to 119. That'd be a good trade from there to 119. 12 ticks. I should have listened to you a lot back when I wasted time with NQ. Seriously, yeah. So I think we have a case to make. I also something I'm seeing in the industry. So Iron Beam has a cloud platform, right? And I'm gonna bet you, not that I have any direct knowledge or anything like that, but I'm gonna bet you at some point that NinjaTrader does a cloud platform. I think that you're going to see a lot of these guys in the futures move over to having platforms that work on your phone in some way or another, whether it's in the cloud or if it's just a phone app. Okay. And at that point, then you really, now the audience, the potential audience that we have out there of people that could trade the micro 10-year is huge, right? It's a lot larger of an audience than it is today. So I've just kind of been sitting here thinking about like, what is the best way to make that case? What's the best way to make that case? Maybe I should say you should start here. I know, but like you can make a YouTube video with a catchy thumbnail and all that sort of stuff. But I got to tell you, here's the thing that I really like about the 10-year though. Like here's the advantage that I think trading the 10-year has given me. Because good luck being successful on the mobile phone. Well, if you're swing trading it, then I think you're fine. You're not going to scalp on it on a mobile phone, probably not. Although I have to say, TLA trader, like go and take Iron Beam's demo. Go and do the Iron Beam app demo, and they have a DOM in there, and it's pretty damn good. It's pretty damn good on mobile, man. It shows you what you need to see. It doesn't have the volume columns in the middle like Jigsaw does, but it's pretty darn good. And for somebody that wants to swing trade and be able to like go out, leave the house while a trade is on, it's a darn good option, right? And what we really need though is we need something where it's like it's Jigsaw or NinjaTrader, the platform that you normally use, and you still have the option to go mobile with it too. Which right now the best for that is CQG, and you have to pay extra for it. It's a big mess. Nah. Don't want to do that one. But it's coming. And I really think that the audience for the micro 10 is a lot larger than it is now. So I think we should prepare ourselves for it, because nobody, and I really mean nobody, knows that better than me. There is no greater retail trader a trader on the retail side that knows more about these than I do at this point. There's John Grady, of course, but I think that's kind of a little bit of a different category, because he's more an educator than he is like a guy on YouTube, right? Plenty of other traders trading futures and trading the ES, but none of them are doing treasuries. But what I was going to say, it's about time for me to get going. So let me get to the thing that I was really thinking about. For me, the advantage of being in the treasuries, okay, is that the treasuries are so efficient. They don't let you get away with things. So if you trade the S&P 500, or especially if you trade oil, they will do this thing where you'll have these periods of success. Like they're very, very good at making you believe that you've figured it out, right? That, okay, here's the pattern, and all I ever have to do ever after that is just trade the pattern, right? And most people, what they'll do is they'll trade the pattern to their ruin. There are some people that are lucky, they trade the pattern, and then they kind of somehow avoid the losses when it blows up. And then they don't really have to trade the pattern anymore. They can just claim forever that they were profitable now at that point. I see that a lot, seriously. So you have all these guys that are like selling systems with signals, and you actually go and do like the statistics on it, and it's not a working system, right? And especially in the S&P 500, there's all these price action guys, right? Like there's no edge whatsoever to these patterns that they're pointing out, but because they take on such a large stop compared to their take profit, they get away with it most of the time. And then everybody just kind of ignores it or isn't paying attention when they blow up, right? So don't get me wrong, a system generally tends to do better with a large stop, but when you're trying to pull performance metrics out, having the large stop kind of will season your stats so much that it kind of hides the problems with the system. Do you get what I mean? Oh, well, I don't. So Jar Jar, you're probably talking about Matt, because I've heard a lot of people say that Matt deletes his past streams when they're not profitable. That's not true. It's just that he's doing what I do, where on YouTube, if you come over here into the channel, into the live streaming dashboard, and you come into the stream settings, there's a little checkbox here. Where is it? Unlist live replay once the stream ends. So the replay goes into a playlist. Okay, goes into a playlist of past live streams. But it won't come in and clutter up my main YouTube page, right? Because when I come in here to this, and you say, okay, I want to binge watch Seth. Okay, start here. That's the first thing that you want to go to, and then uploads. These are my last few videos, right? And these are the videos that I want you to watch. And I don't want it to be, oh, go check out my last video. It doesn't even show up here because there's all these live streams, right? So that's what he does. If you list the day, I bet you I can find it, because somebody said that on the Futures IO forum, and I went and I found the video for them. I'm pretty sure that every single one of them ends up being in his live stream playlist. Like that is what's happening. He's not actually hiding them. But the larger thing that I see with the people that are really following him religiously is that he's blown an account. Like, when was it? It was like the last time, I think it was in March, I think it was, he blew an account, right? And everybody just kind of was like, okay. Like, they don't care, they don't notice, they don't think about it. But you just have to think about that from the perspective of, okay, is this a system, a profitable system that if I copy it, I'll make money from too? Well, he blew up, so he's blown up multiple accounts. So what does that tell you? He's taking on excessive risk, and he has runs that are just really impressive, right? Bonds, on the other hand, they don't do that to you. Bonds, if you got a system that doesn't work, they're going to hit you for it every time. They're going to hit you for it every time. Okay, if you come in and you want to buy, it's a really zigzaggy range, and you buy the top of that range on it breaking out, they're going to crash it down on you and stop you out first, and then go every single freaking time. The treasuries are so efficient, and if you think that you have found some sort of technical setup in the treasury, so like, I'll go through and I'll do a thing like, hey, here's this new indicator they found, like we're using a cycle indicator, or I'm using autocorrelation, right? And I'm going to go and back test it, right? And I'll back test that on the S&P 500, and like, maybe I'll find that it made money, but largely because, it made more money on the long side and the S&P 500 was up. So it wasn't really actually pulling edge. It was just making, it was just in line with what you would have gotten from being in the index, right? And then you go and you look at the treasury, and it'll do terrible. It'll just be absolutely terrible. like the technicals, every technical trading strategy that I've ever done ever back tested performed worse in the treasuries. The treasury is just a more efficient instrument. And what does that mean? It forces you to trade it right. It forces you to understand the order flow, forces you to understand the economy and the news and what's going on. And I really think that I had a hard time understanding what was going on until I had learned all this microstructure stuff, right? So that's the advantage of the treasuries. As a treasury, it forces you to do it right. And once you've learned on the treasury and you know how to do it right, you go anywhere else and it's easier. You think you're doing a dis? You know, I don't know. I don't want to be critical because he's certainly had his successes, and it's not like I'm like hyper consistent all the time, right? I've had some pretty ugly losses, you know, a few weeks ago, so didn't blow the account, but I'm not very happy about my performance over the year so far. So what's doing a disservice and what's not to traders, I don't know. All I know is that there's a lot of information that we know is true and has been proven that most retail traders don't have, and that I can provide and nobody else does, and that's all I can say, right? I prefer to trade the indices because I need some sort of volatility to be successful. Well, yeah. But that's where I'm saying that again, like, are you sure that that volatility is really providing an edge for you? Or is it just that that volatility allows the randomness to fool you more easily? Right? Because when you catch something in the treasuries, like you've probably caught something. Like you're in line with the markets. So usually that you understand that market and that the reason why the treasury is largely moving up or largely moving down, and you're on the right side of it. That's usually what it means, right? Whereas in the S&P 500, you can get you just get lucky all the time. Based on what you're saying, it cements that most of these other channels on YouTube is, well, I don't say that they're lying. Like here's the thing. Matt in particular, I really respect because he's the only, well, I'm not going to say he's the only, but he was the first other streamer in the day trading space that I felt actually came in and did it right and was honest about it. He's not coming in with like this obscene marketing where he says, you know, we made $5,000 and you can do that too if you just buy this simple trading system, blah, 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 blah. This is what these people always do. And man, it's a CFTC, you know, like what happened to Warrior Trading right now. He's just like me. He's a guy, I'm streaming my trading. But he has become more popular than us, I think, in part because he does put like numbers on his thumbnails is probably the biggest factor. But then he is also trading the S&P 500, so that kind of helps you too, right? I should get going. Yeah, I just got caught up yapping. Well, I have got to get going. So see you guys tomorrow. Stay profitable, friends, or at least don't lose it all.